Hi everyone, I'm Matt from Look Into Bitcoin, and today we'll be looking at why the last cycle was an anomaly. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now, I'm just on the Pi Cycle Top indicator here on lookintobitcoin.com. And if you weren't already aware, the Pi Cycle Top indicator is one of the best metrics available for calling when the price cycle top is going to occur. Historically, it's called the price action peak within just a few days in almost every Bitcoin cycle. We can see, even in the double peak cycle in 2013 and into 2014, the price action peaks were caught by the Pi cycle top indicator. And we know that the price cycle is going to peak because we'll see this green line being crossed by this orange line. This green line is the 350-day moving average multiplied by a value of 2, and this orange line is a 111-day moving average. And this Pi cycle top indicator actually got its name because if you divide those two numbers, it becomes very close to 3.142, the value of pi, and it's the closest we can get to pi by dividing 350 by another whole number. So that's where it gets its name from if you weren't already aware. But we can see in every single cycle, like we said, it is called the price action peak. But if we look to the most recent price action peak, the last bull cycle we saw from 2020 into 2021-22, we can see again it called this price action peak almost perfectly to the day. But then we made another all-time high, which is something we hadn't seen before. Quite anomalous price action as we came down from over $60,000 to beneath $30,000 before rallying up again to near $70,000. This is something we hadn't seen before in Bitcoin. The closest thing we had seen was, like we said, this double price action peak we saw in 2013-14, where the price action peaks were very similarly distanced from what we saw in the last cycle from April to November. But even in these instances, we did get two crosses on the Pi cycle top indicator. And again, in this one from April to November, almost the exact same period of time, there was a huge divergence between these two moving averages. So why was that cycle different? Why was this cycle almost an anomaly with two peaking all-time highs that not many people really predicted or anticipated? Especially if we look at something like the realized cap hodl waves, what we can actually do is remove a lot of the shorter term age bands to show the influence on the realized price of these longer term holders. And what we can see is if we just draw a line between a few of these peaks here, we can see in the double cycle peak, maybe there was a little bit less short-term interest during the second price peak, but if we look at something like the 2017-2018 cycle, when we had this exponential run-up, maybe a lot of people thought we'd peaked at just beneath $10,000, but then when we peaked finally at just beneath $20,000, there was actually an increase in interest. And in every single one of these cycles, it's been very clear just looking at the realized cap hodl waves where the peak was. But in this most recent cycle, there was a huge difference between the amount of long-term holders taking profit and new interest coming into the space between the first all-time high peak we had and the second all-time high peak we had. Almost like it surprised many traders and investors. If we look at something like the 1 year hodl wave as well, this really reiterates the fact. This 1 year hodl wave shows the percentage of all Bitcoin on the network that hasn't been moved in a 1 year period. And we can see in every single cycle, this is bottoming out very substantially as we peak, bottoms just afterwards and then starts to increase, and we usually start to see a new bull cycle kick off once this value peaks. But what we can do again is if we just get the drawing tool out, we can see in a very similar fashion, this peaked pretty much as this was bottoming out, like we can see very similarly in all of the previous Bitcoin cycles. But then once we saw this second peak, this was actually already increasing, which shows that a lot of the longer term holders, like we saw from the realized cap hodl waves as well, a lot of holders were already ready and committed to holding for a long period of time. They thought we'd already peaked in price. They thought that we're going to see a long drawn out bear cycle, and they thought that it was just worth waiting until the next cycle before taking profits, which is very unusual, especially considering, like we said, what we saw here in the previous double cycle peak where we saw this decrease. Maybe a lot of people thought this was the initial or final price peak, but then it decreased further as more interest came and more people managed to try and take profits on the second price action peak we had. This pattern we're seeing in this data is actually most similar to something like we see here, where we had the price action peak, retraced, bounced, but didn't bounce into nearly as high a price as we saw in the actual peak in price action, but we managed to see this 1 year hodl wave start to increase. So again, we saw this retracement and bounce, the 1 year hodl wave start to increase, but then reached a new all-time high. It was almost like a dead cat bounce, a bounce during a bear market that went higher than the original peak, which is, as we said, very anomalous. And especially if we go to something like the Pua Multiple, which shows a very similar story. This is looking at the daily coin issuance of new BTC entering the market denominated in US dollar terms divided by a 1 year average. And we can see again, we peaked in this red zone as Bitcoin originally surpassed $60,000. We had our retracement actually briefly into the buy area before bouncing again, but to a much lower level, almost like this was not anticipated by the miners, or there was just no real interest in this second peak, which if you were around at the time just a couple of years ago, it kind of did feel like that. A lot of people were just kind of unsurprised, unjoyous by this second peak. It's almost like all the excitement had actually reached its peak and maximum at the first cycle peak, at the first surpassed point of $60,000. But why did this anomalous price action actually happen? Well, if we go to the TradingView chart I've got loaded up here, which is BTC USD, but divided by the M2 money supply. And the M2 money supply is all the cash in circulation and cash equivalents within the US. And what we can see here is after the COVID 2020 pandemic, we saw a huge increase due to the stimulation required of the economy just to try and prevent a huge global recession as all businesses shut down. This new injection of cash into the economy really rallied this Bitcoin price to new all-time highs. But what we can see is if we just compare this price action to the standard BTC USD chart, where we see the second peak actually surpassing the all-time high we had set, if we divide Bitcoin by the M2 money supply to get almost this inflation adjusted or money supply adjusted price of Bitcoin, we can actually see if we zoom in that the all-time high didn't actually surpass the all-time high we'd originally set. As this M2 money supply continued to increase, so the money supply continues to increase, Bitcoin compared to the money supply didn't actually reach a new all-time high. It was almost a double peak cycle where they reached almost the exact same price action top. Pretty fascinating, but I think the answer to why this cycle was an anomaly is, especially if we compare the M2 money supply to the previous cycles, we can see this has been on a almost constant, very predictable uptrend before we zoom out and we can see the absolutely exponential rise we had in this M2 money supply in the most recent cycle. Interesting to note as well, we're actually starting to see this decline. So it'll be interesting in the next Bitcoin bull cycle to see how we actually perform with a contracting money supply, to see if this actually provides enough fuel and liquidity for Bitcoin to really reach exponential levels. So just to summarize, Bitcoin's 2021 double peak cycle is unlike any topping price action we'd previously seen. We usually top with an exponential price rise as opposed to two separate grinds higher like we saw in 2021. And according to most metrics, price action had exhausted its upside move as we originally surpassed $60,000, and our second move above the level was something not many expected. And this upside deviation was more like a dead cat bounce that rebounded beyond any expectation. And this is mainly due to the huge increase in the M2 money supply and general liquidity of money in the markets coming in, and people just looking for places to park their capital to try and avoid all of their money being eaten away by inflation. But one thing we need to take into account is that this could always happen again. So be prepared. Like we said, the M2 money supply is actually contracting for the first time in a long time. So it'll be very interesting to see how Bitcoin and crypto assets react to the new market economy going forward. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live charts, in-depth newsletters, indicator alerts, private trading view scripts, and more of a fraction of the standard industry price. And let me know in the comments down below and on social media, what are your thoughts on the previous cycle? Did you anticipate a double peak cycle? And what are your thoughts on the future bull markets? Do you think we'll ever see like that again? Let me know in the comments down below and on social media. As I said, I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.